Hello, everybody. Happy Monday. We got a new week here. Hope everybody had a fantastic weekend. And yes, I am down here live on the floor of the CBOE in the S&P 500 options pit. And, even with CPI tomorrow, there is not a lot going on. Volume is really light again. It's almost as if people don't care. And for those of you that will be around later on, I will be actually right up above where I am right now on an interview with Liz Clayman on Fox Business just after 2 o'clock Central Time. And then we're going to be talking about that. We're going to be talking about why there is not maybe a little bit more, I don't know, concern activity ahead of CPI tomorrow. So everybody tune in, please, and we will see you all later on Fox for my Fox Business hit. But as we know, we got to start off here and smash away, like, smash, do all that stuff here while I'm watching. We Bloomberg on the big screen in front of us here, and the gentleman they have on right now, his name is Charlie Pellet. Never heard of him before. He's got to be 130 years old. Kind of looks like Charlie Munger did, quite frankly, but I don't know if anybody is watching Bloomberg right now. Anyway, one of the things that's happening in the markets here, we've talked about hard to borrows, and we talked about gamma risk and the short squeeze on gamma, but let's talk about short interest and short squeezes. Now, those of you that may have read my week ahead newsletter that came out yesterday talked about this in there as well. But this is very prevalent right now. And this is for sure something to be watched. And these stocks are absolutely to be watched as well. What is this here? Okay. So anyway, yes, yesterday's email, you got it, Aladdin. Thank you for reading that. I appreciate it. At least one person does. That's a good thing. That is definitely a good thing. So, I was thinking of something just a little catchy here. I don't know if anybody is as old as me and you remember this song by Randy Newman. It was in the early 80s, but I just wanted to use that in here because of the short part of it. But short people, fantastic, fantastic song. So yeah, that's the old 45 there. That's the old 45. Actually, it was not the early 80s, it was the late 70s. So everybody remembers that song. That's like one of those songs like Rupert Holmes and Escape, the Pina Colada song, right? Everybody remembers that song. So anyway, let's talk about short interest, not just shorting stocks, but short interest and what that is. Okay. So, short interest is the number of shares that have been sold short and have not yet been bought back or covered by the seller. Okay, and we typically see that as a percentage of the company's total shares outstanding. Now, stocks like Nvidia, Microsoft, Amazon, Google, IBM, all the big old stalwarts. There's never going to be short interest or a short squeeze because there are so many outstanding shares in stocks like that. But some of the newer or even some of the, I guess we could call it, meme stocks where there is not a lot of shares outstanding for people to be able to sell. Okay, there can be what is called a short squeeze. So I put together a list of the top 10 stocks, okay, with market caps of at least 10 billion. Now, there are other stocks for sure with higher short interest, but we're talking about stocks, that maybe have no, very little market cap, 2 billion market cap, whatever it is. So these are ones that are readily available to trade, high option volume, fairly liquid markets. And these are ones that I think are really ones to watch. So I'll go through them one by one, and then we'll actually look at some of them. Rocket had earnings last week. They missed. Stock got crushed. Okay. However, if they had a good report, there is so much short interest that if there was anything decent about that report, good guidance, whatever it is, you would have seen the stock rocket, no pun intended, because all of the shorts would be running to cover. Okay, and remember that phrase that I just used, running to cover. Okay, hims and hers, we actually had a position on hims last week. Huge short interest, 30%. Moderna, huge short interest. ASTS, we just put that position on today. They have earnings later in the week. Okay, this is one also that if they come out and they have decent earnings, good guidance, the short interest is huge, and we could see a move well beyond the expected move. Now, we'll review ASTS again, but that's not the only reason that we had put a position on there earlier today. We did it also because stock came down and is sitting right at the 50-day moving average. Excuse me. Okay, you can see Mobileye, Hyatt's been one the last couple weeks that you can read about. It's all over the news for its short interest. Missed you at the golf outing.
Yeah, I woke up that morning and I couldn't move my shoulders. I think I slept on it wrong for like 3 hours. I woke up, it was like I can only move it like this much.
Or you're just getting old like the rest of us. MP Materials, SMCI. I mean, we've been watching SMCI. Okay. At least I use that market cap because that really showed us stocks that were optionable, actionable, where the option markets were large enough, liquid enough to participate in. Because if you look at some of these smaller cap stocks, they trade options, but you might see really wide markets, or you might see, not a lot of liquidity. Okay, Super Micro, SMCI, GME, of course, it's still on the short interest list. It's not like it was when the whole meme stock craze hit a few years ago. Still on the short interest list, and then a stock called OMC. Now, if you look down below here, boy, most of these stocks have been unbelievable, whether it's due to the short interest, whether it's due to, some guesswork, whether it is due to people looking at some YOLOs, meaning you only live once, where kind of taking a shot. Even with Rocket's big decline last week, it's still up 55%. Hims is up over 100%. Moderna, not so much. ASTS, which again we have the position on, that's up 120%. So for our position, we're probably going to need a really good report there. Mobileye, not so great. MP Materials. Okay. That is one to really watch because if I'm not mistaken, MP Materials actually is a supplier to NVIDIA. So MP Materials up 350%, so on and so on and so on and so on here. Okay. Now you can find a list, whatever you want. In fact, if you go to the NASDAQ site is really the best that's out there. If you go to NASDAQ short interest, just Google NASDAQ short interest, it'll come up with a site. It'll ask you to log in. I don't believe you have to be a member. And then you can get short interest, in lists any number of ways you want, whether it's the bigger cap ones like these, or at least some of the smaller cap ones, but that'll give you a nice list. Now, you also may see, besides the percentage that we just saw here, so this is the amount of shares outstanding that is sold short. Okay. There's also something out there, a metric that is very, very closely watched. It's called short interest ratio. Okay. Real easy to figure out. Real easy to figure out. All you take is the number of shares sold short divided by average daily volume. Okay. Average daily volume. Okay. Now, this is also called days to cover ratio, because what it does is it gives us a calculation that determines, based on average trading volume. So it's pretty real to what's going on, not just the amount of shares that are outstanding, but average trading volume. How many days theoretically it would take the shorts to cover all of their positions. Okay. Obviously, think about it. The higher this ratio, the more pressure there could be to the upside, because the longer it would potentially take shorts to cover their positions. So let's go through an example. Let's say a stock has short interest 40 million shares. Okay. Average daily volume in that stock is 20 million. 40 divided by 20, 2 to 1. That means 2 days to cover their positions. Okay. That is, if you're going to look at some of your lists here, that's not that high of a short interest ratio. The higher that number is, the longer it takes to buy back those shares. Okay. And what happens is it's like this self-fulfilling prophecy where when we went into the gamma squeeze discussion a couple weeks ago, what happens on a short squeeze is, if you think about it, number one, there's not a lot of outstanding shares to start with. Okay. So what happens is, as the shorts need to go run and cover, and there's not a lot of stock to buy, unlike in an Amazon, a Google, a IBM, Microsoft, whatever, where you're not going to see a short squeeze because there's plenty of stock out here. So in this scenario here, you see the shorts having to run to cover their positions, and think about the basic principle of supply and demand, right? That it's such a perfect example of supply and demand. In that case, if you think about it, all of a sudden there may be a ton of demand to buy something, the shares of this stock, very little supply. So what happens? It's kind of like, implied volatility going into an earnings event, right? Why does implied volatility keep going up and up and up and up and up and up going into earnings? It's because there is a big demand for people buying options, not as much supply. At some point, it's going to balance out. Well, it is the same scenario here. Does that make sense to everybody? Is it possible to find out time frames, expirations of the shorts? Well, Bill, the shorts, remember, it's stock position. There's no expiration, right? It's not, we're not really talking about short options here. We're talking about short stock. Does that make sense? And just because, you may look on an option chain or get option data that says that, somebody may be short 1,000 of these calls. Well, remember, if someone's short 1,000 of those calls, I mean, someone's long 1,000 of those calls. Okay, so what happens in a short squeeze scenario? We see a rocket ship. We see a rocket ship. We typically see intense volatility, massive amounts of premium. Okay, so it happens when traders who have bet against, and it doesn't have to be a stock, it could be any asset, it could be a commodity, it could be Bitcoin, whatever it is. Okay. Hey, Mike, are you hearing Jeff Lake? Okay, I got him in my ears here. So let me, you guys all hear Jeff? It's probably in the option essential room. What's that, Mike? Yeah, yeah, he is in that room. That's okay. That's okay, everybody. Just give me 30 seconds here as Jeff finishes up talking to the room, because I got him in my ears, guys.
You could mute him. Go to. Oh, I mean, you can.
Okay. Thank you. Yeah, that works too. Sorry about that, guys. Okay, so we know what the short squeeze is. So especially if we get into a situation where there's high short interest and then positive news, okay, and now throw into the equation maybe a stock is so oversold, so the technicals are showing so oversold, RSI is really really weak, that could be a perfect storm for a short squeeze. So things that you want to look at to try and identify if you're looking at this, okay, short interest percentage, short interest ratio, which we just talked about. They're two different indicators. They would work, you know, with each other. They would both move in the same direction, but two different indicators. Open interest spikes. Okay. That means you got to look for volume areas as well. Okay. And then this next one, the high funding rates, that comes into if a stock is hard to borrow. If a stock is hard to borrow, that's typically because there's not a lot of outstanding shares out there. And that's when you get into a situation that we have discussed often, where when we're comparing put call parity and the amount of extrinsic value in a call and a put at the same strike, okay, if the put is really way more expensive than the call at the same strike, it's for one of two reasons. Either A, the stock is paying a dividend, or B, it is hard to borrow. So that is an indicator as well. That is an indicator as well. Kevin, you bet. Volume indicators are tremendous, and I use them. Anybody that sees my Think or Swim layout knows that I look at volume. Now, that's certainly not the only indicator that I use, but that is a confirming indicator. So if you're using something else, folks, moving averages, any sort of Bollinger Bands, whatever it is, volume as an added indicator to that to confirm something is really, really, really important. Okay. And again, we know what happened in the GameStop short squeeze a few years ago. And that was, retail action, meaning the Reddits, the Wall Street bettors out there took a situation where the big institutional players in the game, okay, the big hedge funds, okay, they were short GameStop because they thought the stock was going to zero. And then, it just started a trend on the internet on Reddit with Wall Street bets. And it just started growing and growing and growing. And these retail traders took on these big institutions and beat them. They beat them. Okay. And short squeezes can absolutely be profitable. Okay. But they are unbelievably volatile and they don't last forever. You typically see a really quick pop. Now, when I say really quick, am I talking about minutes? No, it can last days. It typically does not follow fundamentals of the company. Okay. So if you're going to look at a stock and you're going to put a position on either long or short, yeah, Roaring Kitty, you got it, Robert. He was the leader of the band, still is. I know he's hiding out somewhere. He'll appear again. But if you are going to do something in a short interest stock, you just have to expect a lot of volatility and just always, always trade it with limited risk, as we always do. Okay, so what happens, and we looked at this, this was true in the position we took in SureBet, SBET, last Friday. And I'll point this out. So if you think of how the VIX trades, okay, is the VIX skew, is it on the call side or the put side? And you know what, Paul? Good guess. Before we get into this conversation, let's actually get to Thor's word today. We'll start that up and then we'll come back and we'll look at some examples. We'll talk about this skew thing. It's really important. So Shore, Mike Shore, Thor Shore says that today's word of the day is squeeze. which was a great, very short-lived band of the 80s. Hit song Tempted, amongst others. Love them. Believe their lead singer was a lead singer that was in like 4 or 5 other bands, Paul Carrick. But that Squeeze was very, very popular during my college days. Tempted, Black Coffee in Bed, bunch of others. They were hot for a minute or two. Mike and the Mechanics, Aladdin, one of my all-time favorites. That was actually Mike Rutherford from Genesis that started his own band. They were phenomenal. Same era. Absolutely same era. Cool for Cats, yep. Love this, guys, man. We should have an offline conversation about not just one-hit wonders, but great bands of the 70s and 80s. That would be awesome. I would love to. I could listen to that music nonstop. All right, let's go back to the skew here. So let me ask the question again. When you look at the VIX, okay, are calls or puts typically more expensive, relatively speaking? Where is the skew in the VIX? How long? That was by Ace. That was another band of Paul Carrick's. Band was Ace. If you turn on Yacht Rock Radio on Sirius XM, you can hear that about 15 times a day. Yes, the skew is on the call side. So if you were to pull up, and we'll look at it right now, if you were to look at VIX options, not only are VIX call options more expensive, meaning the implied volatility is higher, but the further out you go, further out of the money you go, the higher that implied volatility gets. That's where that skew is. Well, it's the same thing in these meme stocks or in these short squeeze stocks. So the further out of the money you go, the higher that volatility is. If we look at our S-bet position that we put on last week, we put on just a vertical call spread. And at the time, we talked about it being so cheap. Okay. Why was it so cheap? Because there was a massive skew. The option we bought, the call we bought, which was out of the money. Okay. I think we'll look at it. I think we have the 26 or the 28. I'm not sure. Let's actually pull that up here. Hang on. Okay. 26. We have the 26.31. Okay. Long the 26, short the 31. Just a simple $5 wide call spread. Nothing fancy about it. Okay. But we got in that really cheaply. I think we got in for 105 or something. And if we now look at the implied volatilities, blow this up here. Okay, here we go. So incredibly high vol to start with, 180%, right? But you can see the option we bought is 180 implied vol, incredibly expensive. The option we sold is all the way up at 200. And you can see the higher we go here, the higher the implied volatility gets. So that is the same sort of skew that we see in VIX call options. So let's pull up just next week's VIX call options. Okay, and you can see VIX right now is right around 16. So at the monies are here, and you can see the further out of the money you go, the more expensive from an implied volatility standpoint it gets. Okay, now the properties, the components of a call spread like this is no different than when implied vol is the same, structured the same between the two strikes. At expiration, same thing is going to happen. Spread's still going to be worth parity. It's, if back in the case of SBET, let's say the stock at expiration closes at 29 and we have the 26.31 on, what's it going to be worth? It's going to be worth $3. Okay. If it closes above both strikes at 33, it's going to be worth $5. If it closes at 27, it's going to be worth $1. If it closes below 26, it's going to be worthless. So the same thing still happens at expiration. All of the extrinsic value goes to zero. But during the lifespan there, because there is more of a demand for these further out of the money call options in a short squeeze potential scenario, that's why those are quote unquote more expensive. Does that make sense to everybody? Okay, and let's take a look at ASTS. Okay, now the ASTS position that we put on was a diagonal. So it's not fair to compare one expiration versus another. But let's look at let's look at a comparison here of kind of at the money options here versus out of the money options up here. And you can see we go from what, 160 up to 180, even higher, the farther out of the money we go. So that is something you will see, something you always have to be aware of. It is not something to be afraid of, but you just need to understand why that is. Okay. All right. I think it is Monday wheel time. And let's see, do we, excellent, Mike. That was quick. Let me pull this up here. All right. Whoa, that's not the right one. That says 731 on it. What did I do incorrectly? Mike, do you have it in here? Oh, I was in the wrong spot. It's always user error, and typically that user is me. I got it now. All right, guys, it is a fresh week. Everybody is eligible today, and let's have at it. We are going to have Gregory or G Slade or Guillermo G Slade. This is got a new name. Yes, operator error, and I am the operator. G Slade, are you in the house? Great to see a new name on here. Yes, you are. That was quick. You were ready. You couldn't wait to respond to that. Awesome. As you see on the screen, shoot me an email. prosperswag@prospertrading.com. And we will get some swag out to you. Get us your size and your email address or your mailing address, please. Oh, there we go, Bear. Let's see. Warm Dust, Ace, Roxy Music, Squeeze. I didn't know about Roxy Music. Love it. Great voice, Paul Carrick. And I know he was in a lot. He did a lot of backup vocals too for a lot of bands out there. Lot of bands. Is that true, Mike? We only have 12 likes. Aladdin said, okay. Give us a quick like on your way out the door today, everybody. Thank you very much. Appreciate it. Good start to the week. Really good start to the week. CPI tomorrow, PPI on Thursday. Okay, two big economic numbers. And don't forget to tune in. I will be about 20 feet from where I am right now, just after 2 o'clock Central Time. I will be on Fox Business with Liz Clayman. So give us a look and let me know that you are out there. All right. Thank you, everybody. And we'll see you tomorrow. Have a great one.